Welcome to 5 Minutes for Finance, where we give you important money management strategies for small business owners. Here's your host, David Worrell.
Hi, it's David Worrell from Fuse CFO with another 5 Minutes for Finance. If you've got 5 minutes, I want to teach you something really important about finance, financial management of your company, building a great company. I think that all starts with hiring a great accountant, because only a smart accountant can produce accurate financial statements, and that's what you're making business decisions based on, right? So if you're making bad decisions based on bad, incorrect data, doesn't it always start with a bad accountant? Let's talk about how to hire an excellent accountant. I have 7 questions and a kind of a process. I like to have an accountant sitting in the interview, right? It takes an accountant to know an accountant. The person who's in the interview asking the questions has to know the hard, technical, complicated questions to ask, and they got to know the right answer to expect to hear from the candidate. So what are some of those questions? I have at least 7 that I like to ask. The first one is always the same. How do you know whether the person who had your job before you did things correctly, right? How do you know that you're starting with a clean set of books? So many people make mistakes in accounting. It's so easy to do. Everyone who touches the books has to have an eye out for the kinds of mistakes and ways to improve the books. So ask the person you're interviewing, how do you know whether they have accurate, complete, up-to-date, solid financials when they start on day one? What's the first thing they're going to do when they sit down? That's a tough question, and there's a couple of good answers, but it will really differentiate the great accountants from the poor ones if they can answer this question definitively. Question number 2, define debits and credits and explain why we use them. Now, look, you don't have to know what debits and credits are to do proper data entry, but you absolutely need to understand the concept of debits and credits if you're going to be a senior accountant, a controller, or a CFO. If you can't tell me why we use debits and credits within accounting, you don't have a good foundation in accounting theory, and you're not going to go very far. Number 3, using debits and credits, describe the T account for booking sales tax. Now, this could be any kind of liability payment. It could be a credit card payment or a income tax payment or payroll. I love to say, describe the T accounts for booking a payroll journal entry. That's a really complicated question that gets right to the point about whether this person has experience doing things like sales tax and payroll, or maybe whether they were just using a point-and-click solution to get it done. Number 4, why and when would you use a journal entry, a general journal entry? And the right answers for that might be something like at the end of the month to book depreciation, or at the end of the month to do prepaid expenses, or when we create a new liability account that's going to stretch over multiple years, blah, blah, blah. Okay, there's lots of answers, but most people who don't understand the month close process will just stare at you with a blank stare about when they use journal entries. Or worse, they'll say, I use a journal entry for everything. Okay. Number 5, if a credit card shows a negative balance on the balance sheet, what does that mean? Hey, a balance sheet should have almost no accounts with negatives on it. So if they don't recognize that a negative balance on a balance sheet is a problem, they're not a solid accountant. Number 6, what is the only line on the balance sheet that's also found on the income statement? I'll answer that for you. It's net income for the year. It shows up on the balance sheet under equity. It also shows up as the bottom line of the P&L. It's what connects them together and what makes the whole accounting process work. A great accountant is going to know that answer right off the top of their head. Finally, how would you book a contribution from an owner or a distribution to an owner? And this gets right to a really important concept, that equity is totally different than revenue and expense. As a business owner myself, when I put money into the business, it's not because the business made a sale. It's not revenue. it's actually the opposite, right? The business needs a little extra help, and so the owner is contributing funds, and that goes into the equity section of the balance sheet. And if somebody can answer that question, it reveals that they have a deeper understanding not only of the balance sheet, but of equity issues and of the kinds of issues that are going to be very important to you as an owner. Okay, I'm looking at my hourglass. My 5 minutes is up. I'm going to let you go with that. I hope you hire a great accountant. If I can help, please give me a call. I'm offering a one-time, 1 hour free sit-in-your interview, listen to the candidate, ask these questions, and tell you what I think of your candidate after the interview is over. So if you'd like to take me up on that offer, just give me a call. You know where to find me, david@fusecfo.com. Thanks. See you next time.
Thanks for listening. Visit fusecfo.com for our social media channels and more.